Hi, in this video I'm going to show you the hidden levels of support and resistance that you might find in the markets. Now, of course, if you know me well, and with a name like the Pivot Trader, it's obvious that I'm talking about pivots here. So let's get on. And what are pivots first? If you've not come across them before, there's various different types of pivots. Firstly, there's pivots like a pivot swing, where you'll get a bit of price action in the market, which may come as a bit of a swing in the market, and someone will refer to that as a pivot swing, a swing in the market. So you've got these pivot swings, and then you'll have these levels where prices come up, pull away, up, pull away, come back, come the other side, and eventually you get this sort of pivotal area or pivotal level through the markets. So there's a couple of different ways, but what I'm looking at here is pivot levels themselves. So I'm looking actually on what's termed the proper term of them is the floor pivots. Now, floor pivots were calculated by pit traders. They're very easy to calculate. Basically, the prime pivot or the pivot point itself is derived from the high, low, and close of the previous period. So, firstly, you've got something which stays still until the next period. Through the next period, it's not a moving target. It stays still. There's lots of benefits to actually having pivots on there. They're horizontal. They're not any angles, etc. So again, they might help you with your eye in terms of looking at the market. Anyway, we're going to look at the charts in a moment. But that's the prime pivot. Then I'm talking about here support and resistance levels. Well, those support and resistance levels come from the calculation of the high, low, and close, and the pivot point that you've already calculated. And using various calculations, we can see these hidden levels of support and resistance. Now, of course, you don't have to calculate them yourself. It's all done automatically. Most charting packages, in fact, I haven't come across one lately that doesn't have pivot levels or floor pivots or pivot points on there. Now, combined with the pivots, the pivot levels themselves, and using multiple time frames, they're extremely powerful. I'm going to demonstrate that just by simply going straight to a chart. Okay, so I brought the euro dollar up. It's the most liquid pairing out there. It's a 60-minute time frame I'm looking at here, and I'm looking, the pivot level itself is a daily pivot period. So this period here, this line here, was actually calculated a minute past the minute past 12, and that pivot then stays there all day long until the next day starts, and then a minute past and you've got the next period. So they're actually calculated for the day. Before I look at the support and resistance levels, a bit of understanding about the pivot itself is it's like a regression line in effect. Price will come back to it quite frequently. Like price will come back to a moving average. If I was to put a moving average in, you'll find that price stroke the moving average itself comes down to price sometimes, or vice versa. But you've got that sort of regression sort of pattern. Here we can often get regression patterns which can be quite surprising, particularly when price is sort of appearing to move a long way away and probably too far, and then all of a sudden it backs right the way up and catches the pivot level. I'll give you some statistics on this in a short while, because it all comes together then, why it happens or why it might happen. Okay, and then what I've done here is I've just clicked a button and it's showing you now the pivot levels themselves. So we have, I'm going to use my pen, we have, there's the pivot point itself, and then we have resistance 1, resistance 2, and resistance 3, and in fact on here we've got resistance 4. So it's actually this charting package is giving me an extra level. In terms of below, we've got support 1, support 2, and it was support 3, support 4. So the same sort of principle. So they're the levels. Now, understanding how they come into play, well, often the R1 and the S1 often come in close to being with the previous day's highs and lows. So in itself, it gives us a bit of a guide. What am I looking at here? If we look at the pound for a moment, he says, there we go. So Friday's low came in where it's just fractionally lower than the previous day's low. The high, well, for a long period, the R1 was just above the previous day's high. So there is some overlap, and that possibly helps it to a degree. But of course, it went a bit lower on the pound here. It went and hit the S1. Now, when I look at it, a thing to just pre-warn you, I mean, you can look at this and your eye may be drawn up to here, and you sort of suddenly think, wow, that's magic, where it's found support so cleanly. But it doesn't always find it like that, and it's sometimes it'll be like this. It's a mess around its support level. So be prepared. It's run through it a little bit here, but pinched all day on the pivot front. The previous day, look at the range, it's very, very tight. Now statistically, I'll give you some stats here. If you want to get a pen and paper, you can pause the video, but I'll give you some stats just a second. Okay, hopefully you've got your pen and paper. So some stats. The chances of an R1 and S1 actually being hit in any time frame on that we were looking at these, as I say, this is a daily time frame here, but the chances of them both being hit are effectively 20% days. Now I've said that, and we've just got one there, and one here immediately where they've both been hit. What's the market doing at the moment? It's consolidating. The ranges are tight, and it's just more higher probability that when the ranges are very tight, the next day you'll potentially see both of them. So it's a bit of common sense needed to be applied there. But in normal trading, when you've got, you see how flat this market was as well. But when you've got sort of some more price action moving around there, you'll just see that there we go. Got a bit of a trend here coming, finding support there, bouncing off that into its back into its daily pivot, eventually breaking off of it after a flatter day. Then the pivots are a little bit more pinched. So that's an important thing in terms of if you're looking and it's not a pinch day beforehand. If you're expecting it to run up to an R1 or an S1 as a day trade, for example, you just be prepared. You might have to wait until the next day for it to do so. Next thing is the pivots themselves and the stats that sit around the pivots. I'm just going to give you some very high level numbers here, which I'm quite happy to share. You've got round about a 70, I'm going to put 75. It often runs up as high as 80% over a longer period on the pivot itself being hit. Beyond that, that's the pivot itself. The chances of this being hit is around about 75%. Beyond that, you're looking at sort of 40 to 45, but depending on the trend, if the bigger trend is running downwards, the probability of that lower the S1s being hit is slightly higher. It's a bit of common sense. A bit of common sense need to be applied with it. So there's the chance of the 40%, 45% you could put it out to chance of either it's R1 or S1 being hit. But beyond that, it becomes a smaller percentage, and hopefully you can see what I'm looking at here in terms of the probability. The further it gets away from its main pivot, the probability of those support and resistance levels being hit is low. But also, if it's low, one, it might not get there, and two, when it gets there, well, it's got its regression level all the way down here. Even if it doesn't come all the way down, it's got the draw back to regression. Always got the draw back to regression. So even not hit. So the chances are you'll get decent resistance as it sort of pushes through these sort of levels. Particularly when you're in a decent strong downtrend, you'll find that the likes of the R1, R2 will work a lot better. But the S1, the S2 might not so much because of the selling price coming into the market. But the basic stats over a period of years come back to these sort of levels. So if you was actually using one of these as a target, or looking at one of these as a target intraday in this particular case, you might think there's a relatively small chance of the price actually being hit. So that's the stats around there. Another important stat I'll give you now, and I'll be talking about this before again at some point. There's an 80% chance of either the R1 or S1 being hit. So it gives you the price will range predominantly in between these levels. One way or the other, the majority of the price action will be between those levels, so that it gives us a bit of a guide to where the market may spend most of its time during the day. I'll drag this back a little bit and you'll just see the predominant amount of price action there, apart from when you get a bit of news that comes out like this. This was Bank of England, came up beautifully into its daily pivot here and sold off, but of course pushed up, still managed to find support as it's sort of on its way down, even though the market itself is in a strong downtrend. It found some decent support for quite some time off of its S2 level here, and eventually found the day support off its S3. So if you were looking at these as the potential targets, you were scratching your head to where your targets might be, these could be used as them. Okay, I've shown you on a daily chart. Now all I'm going to run through is a couple of higher levels, and then I'll leave you there to have a play and practice and see what you can see, and whether it would have given you any better opportunities with your own trading. You sort of run it back over to some of your trades that you took, where you took the support, where you might have taken profit a little early or a bit late, or didn't take the profit at all and it just completely reversed. I just find it really useful for that, identifying those periods. Anyway, this is a daily chart. It's a 60-minute time frame using a daily pivot. I'm now moving out to a weekly pivot on here. I'm going to change the time frame to a 4-hourly because I can see more of the action. And there we go. So we've got the 4-hourly. I really love pivots on the 4-hourly. The weekly pivot with a 4-hourly time frame. As an intraday trader, it's beautiful. You can just sort of see what's happening. You don't need to sell into the absolute highs here. You've got time because of the amount of price action between them, and if you're in a downward trend, you don't have to be the first one in. You can let things happen a bit more. And as I said, you've got a high probability of the R1 or the S1 being hit in the day. I mean, this is just in a free fall here this week, the whole week of free fall basically, that week there. This week's been pretty, it's just gone, had the news earlier on, but gone a bit flattish, maybe a bit of support off its S1 overall. But you can see how powerful they are on a weekly chart. As you come out, of course, the bigger the money that may be looking at them, because we tend to get a bit myopic. So when you start coming out and looking at the monthly pivots, I then look at a daily time frame with the monthly pivots. You could look at slightly higher, but it's a good point to be looking at. And again, you can see predominant price action between those levels, R1, S1. Yes, we're in a sort of quite a bearish market for the pound at the moment, and you're seeing some reaction. But even in last week's when we saw that big bar there, well, yep, it came down, found some support. It helps you understand why the market might be stalling at a certain level, even if it doesn't reverse. Okay, so there we are. That's a daily. Then when you come out even further, I love coming out even further here, because particularly after it's happened, you think, oh, that's why it stopped there. And you come out to the quarterly time frames. We can put a weekly time frame on with the quarterlies, easy enough to see a bit more. There we go. And just look how it's been so well behaved effectively between its R1 and pivot, S1. It's been within that area. As I say, around about 80% of the time it will be in that range. So if you're coming out looking at what's happening on the bigger time frames as a swing trader, you may find that useful. And then we can come out even further and look at the period of a year, and I'll show you a great example in a minute. So yearly period, and so where it is this year, I've got a weekly. We could actually switch it up a notch to the monthly chart time frames, and again, you can see where price has predominantly been through that period, and you'll just see points where, oh crikey, look, it's just running. What made it stop there? Well, it might have been some other thing else that made it stop there, but it's quite key. Look at the support into its yearly S2 down there, and so on. It's one of those things where you just come out for a quick look almost and keep an eye on, and it will give you an idea. Well, okay, I mean, here look like for several months it found support off its S3. It came down there on its yearly S3 and found support around that level. It took 4 months to break down. At least if you knew it was down there in that area, you could understand why it's got support, and if you were looking to take some profit, you might have taken some profit at that level. But that's, as I say, that's looking at profiting from these sort of things, and I only really want to show you the bigger time frames here for a moment. Now, one last thing, actually, I'll show you Bitcoin. I was talking about this last week, and I was looking at how the price had broken these prior lows, and then I looked across, and of course it's right into its yearly S1. It's really had some fun with its yearly pivots here. The pivot itself, the main pivot point, is up here. It's where we found resistance for the year, the beginning of the year here. This is a weekly chart with a yearly pivot. You can just see, look up here, bang into its yearly pivot, and then it's come off and sold into its S1. Is it going to provide support here? Well, it already has. Look, price has come away from it initially. If it's going to be long term, we'll have to wait and see. But we certainly, if we had been looking to find profit areas, targets, it could well have helped us there. Anyway, and look, resistance up here. Now these yearly pivots are calculated before the year started. So yeah, we're looking at this, and we've got a lot of year left here at the moment, he says. So we've got some points ahead of us to see as general guidance, and depending on your trading zone, what you're trading in, you might be looking. Let's bring the euro out, for example. You might be looking at these as a good idea of where we might next find support. So have a look at the euro. Look, the S3 is below parity. Now it might run through parity. I've got a feeling that the parity, if it gets down there, it's going to bounce off that sort of, or near that area. But if it overlaps, we'll be then scratching ahead to where next. Well, there's the next level of support. But there's nothing technical on this chart in front of us for a long time, and I mean a long time. In fact, I thought it got close to parity at the early stages. People were expecting it to get back. It never did. It's been close to it a few times, and we sort of look back at these levels as possibles. But here we go. We can actually see. Yeah, it's got a small percentage. Remember, the percentage of these pivots being hit are relatively low, but that doesn't mean to say they won't get hit. So around about a 10% chance of it getting down there. There we go. Anyway, I wish you all the best for that your trading. Go back, have a look at pivots, pop some on your chart, see what you feel like. What I tend to do is I have them on, and then I'll take them off at times. So I've got the pivot on at the moment. I'll switch it off and just have a clean chart. So what I used to do was overlay many different time frames, and it gets quite a mess. It's worth doing. If I come back to my 60-minute chart here, he says. Actually, I've only got the daily on there. So it's my intraday. I use a 4-hour pivot on intraday sometimes. It just gives me some good little areas of where the support and resistance might be in the shorter time frames. It also gives me opportunities to trade from. In terms of if I'm looking for a retracement. If I'm looking for a retracement, it's moved somewhere, I'll look at it and come down the time frames and look to see what it's doing off that time frame. Below the S1 it's more bearish, above it it's more bullish. But more about that in my next video. But you can see there's a bit of overlap here as well. I've got other pivots sitting on here as well. He says there's a pivot all the way down here somewhere. So I tend to overlay them a little bit, but it's a bit like zooming in on the sat nav, and if you're not careful, you get too much detail. But there we go. I wish you luck. Have a look at it and let me know what you think. Bye for now.